Hey guys, how are you? Yeah, welcome. A little look at an equity. It's been a while since I've done something in an equities market. This is the sniper circle. It's slightly narrow here because it's optimized for average screen lengths, and I've got a super long one. This is our premium area. This was a setup that we did some time ago. You'll note that there were multiple time frames, so we insist on doing 360-degree analysis. That's looking at all equities that are similar, and also multi-time frame analysis. And for each setup to qualify and to be put up, we do a super macro, a trend view, a pattern view, and then a time frame, trigger time frame view. Overall, we'd seen a bit marginally higher high and quite a big sell-off in NCR on a macro level during 2017, sort of its kind of nadir of its high. And then throughout 18 so far, it's been heading down, 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 bit of a rally there. Although benefiting largely from the long run bull market in equities, it had some very nasty sell-offs. Obviously, understandably, with 208.09. However, it was rather weak through the 14-15 period, right the way down through to there. So no Amazon by that means. So NCRs, often people interact the name NCR on ATMs. They used to be particularly dominant in cash dispensing machines. Anyway, we liked a particular pattern that we saw, and we're drilling down on that trend view, and we had a call for the earnings. They had a particularly bad record for earnings. You'll see just 3 examples here. There were many, many more of gap downs on earnings, getting people's hopes up and then always disappointing. Another gap down on an earning. And there was no surprises then when we got early shorts in the little bear flag there that you can see, down leg, bear flagging on our midpoint, starting a down leg. We put in tentative early shorts with that, and we got the gift of a major gap against us. However, and that's on the smaller time frame, so this is typically the trigger time frame that you would see. That was then, and that was some while ago. It hadn't been all plain sailing though, and this is the curse of being a trader. So this was my update I did yesterday. So a couple of things. Again, the gaps, this was our setup. Note how it came all the way, return move, closed that gap. So the US stock market as a whole kept pushing up throughout May, June, July, and it actually got a reasonable amount of a rally. Then on another earnings, can you believe it, subsequent to that original trigger, another earnings, big volume, another slam down. This time it was a little bit more muted in its rally. You see I've drawn a rising wedge there. In actual fact, we got a new structured pattern that bought us some more time for this downside to potentially work. Since then, it's triggered that sell-off and it is heading down. Now, it recently just made the second interim of the original pattern. Hence why it might have got a bit of a rally. Note the buying wick there. Obviously, the US markets being super weak as a whole, and NCR not being one of the most blue-blooded of them, has seen it spill rather badly. But there was a little bit of a buying wick, having run both the interims of the new wind-up inverted HVF and at the same time the second interim. So you can learn much more about these details and wind-ups and boosters and confluences of targets in a program. By the way, free webinar October the 31st at 7:30 BST time. But anyway, back to this. We still have a confluence of targets down at the 22-21 level to the downside. But what we may get now, having run these interim pause points, is a bit of a rally back. In other words, the overall US stock market could in fact get a little bit of a relief bounce, and you could see it. So this doesn't mean chasing short right now. We're giving you an update on an earlier call on NCR, and also highlighting how standing to process and on that stop, you would have been hanging on by a hair's breadth. Trading isn't always easy. Adherence to process isn't always easy. You will be tested and tempted. Anyway, that did, as I say, give us a large first new impulse for a new setup pattern, and that is it on the downside. Another image that I shared with my premium people that I'll just give you a short period of visuals on just highlights those gaps again slightly more. Downside earning gaps. See the tendency to disappoint on earnings. I'm yet to see an earnings announcement that actually ends up being well received. What do these guys take? What do they chew in optimism chewing gum after an earnings announcement that sees them then always go on to be disappointed again. I'm reminded of that Lois holding the ball for Charlie Brown while Charlie Brown runs up and kicks, and she pulls it away every single time and he falls on his ass. How many times do you have to be taught that? I don't know. Anyway, it seems that new earnings announcements always seem to come in and disappoint. I've shaded the gaps here in red, starting from here. There were more, believe it or not, even further and earlier. So what's coming up? The point of message that is worth considering is you've just run the interims, potentially a bit of a rally, but we have an earnings announcement coming just before November again. Wow. And you've literally got, well, I'm showing you 5 of them, 5 out of 5 disappointments. As I've said, there's more actually. I haven't got the long-term chart. In fact, maybe we can swing by it while I just say goodbye to that. NCR. You can have a look at the bigger time frames, in fact, and I think you'll see how many. But either way, there's another earnings disappointment to the left. When was the last time it actually went up on an earnings? That seems like the last time that was, wow, a real long time ago. What year are we even then? It's in 17, beginning of 17. Every other quarterly has been a disappointment. So who knows what could happen? Bit of a rally with the US stock market and then a sell-off again. If you like trade setups like these and you understand adherence to process, and that even when you have process, that doesn't mean you don't get tested, but that a method means everything. It supports emotionality. It supports your ability to adhere. It tells you which markets to engage and helps ensure that you're focused on high reward to tight squeezed risk trading. And also quick moving trades. This is not typical. This one broke but then had a big think and came back. A lot of that's been the power of the US stock market that kind of reheated it once it cooled off and was wanting to go for the hatch door. But now that the market has turned south, will it be allowed to make its 21 target? By the way, when we were first calling it, it was in the low 30s. That's a better part of a 33% loss in value. I'm Francis Hunt, the Market Sniper. You can also pre-reg for our program, free mini-series, Trader Mastery mini-series on the link above, or you can check in for our webinar on the 31st of October. We are covering FX and equities as well in our community, as you can see, and you can have a look at some of the setups we do. We are not a trade feed. Everyone is participants and trained here, and you take your own trades and accept your own outcomes regardless, but look forward to seeing you if it suits, and it doesn't suit everybody. That was your update on NCR. Enjoy your weekends, and see you all soon and around on the YouTubes. Play nice in the comments. I don't have a numbers model, and I just sack people that behave badly. Sorry, but that's it. Life is short. Okay, enjoy yourselves. Enjoy the weekend. Bye for now.